Shrey, thanks so much for your time. I mean, the market clearly liking these numbers. I suppose it goes without saying that you are pretty pleased with the performance that the group put forward.
It's great to be back, and actually I'm thrilled with how we've done this year. I think it's a tough trading environment, not just in South Africa, but in all of the countries that we're in. We're providing healthcare, and within that context, these kind of results, I think the teams should be quite proud.
Sure. What was the major driver, though?
A combination of things. I think in South Africa, a turnaround from 2018 on 2017 with the core operations in terms of back to positive PPD growth and a continuous expansion into other aspects of non-acute, so complementary services, mental health, rehab, renal, etc. And then also into healthcare services. And then internationally, we've invested quite heavily into PET, so the scanning that sits above MRI scanning, and that's shown growth at around 15%, so that's buoyed us quite well. There's also an element in the statutory numbers where it's the forex effect.
Sure.
It plays out from a lot of these other currencies.
Sure. So a turnaround in your paid patient days, right?
Yes.
PPDs, right? From negative growth last year, it's come back, but it's 1.1%. Is this a figure that you're pleased with, or is this something that you're hoping to grow?
So against last year, where it was negative 1.7, there was a lot of risk management in the industry and case management. I think it's a very positive result. We would have probably seen it closer to 2. Because in Q4 we saw versus previous years, quite a downtick in paid patient days. But let me say that as a good thing for South Africa, that was on the back of us having a good winter.
Right. So
fortunately for South Africa, fewer people had lower respiratory tract infections. As hospital providers, that plays out in the numbers. I think on a go-forward basis, we're still we're positive about it. I think beyond that, our growth's going to come from expanding outside of acute into non-acute anyway.
Right. I mean, there's quite a lot of nervousness from market participants when it comes to the healthcare space. And the major reason is because of the tighter regulation that seems to be affecting your industry quite harshly. And if we just bring it to South Africa, we just start here. The regulators wanting to control the number of hospitals or new hospitals that are opened there. I mean, what is the likely impact on your business going forward?
So for us, we don't anticipate a lot of impact in a negative sense. The reason for that is we strategically had made a decision probably a year to 2 years ago that our growth was going to come outside of acute beds, the hospital beds. So we don't have a growth strategy that's linked to significant investment in hospitals or additional beds. In fact, it's quite the opposite. Over the last 2 years, we've gone from 11% being non-acute, so outside of hospitals, to now 35% of our business being non-acute. The growth rates are far more compelling in that. So it's still the core of what we do, but our growth's going to be in the adjacencies to it.
For sure. And then the regulation there in the UK, and I want to talk to you about your operation specifically there, but that regulation causing players like Netcare to exit, but now they're coming into, or quite aggressively into, the mental health space, which is an area that you play in as well.
Sure.
Talk to me about the competition dynamics there, and as Netcare looks to muscle up, will they be eating into your lunch?
I would hope not. I think practically competition's good for the industry. I think it forces all of us to become much better in terms of how we're managing operations. Because the reality is, beyond South Africa, healthcare pricing the world over is under pressure. You're seeing margin squeeze, which means all of us as healthcare providers need to become better operators. These kinds of things are very natural. I think competition it's not to be taken lightly, but it's not something that we would focus on. I think it's on us to go just to be better, even better at what we do. And as I said, our growth, I think mental health is something we'd invested in a while ago. Mm-hmm. And so we still have a bit to do. There's a few more beds we'll add, but it's not material. Now it's really about running the assets that we have in South Africa better. Where we're excited is growing into a few new segments, parts of South Africa's population that we haven't served historically. And for us, so I think historically we've predominantly served the insured markets. And there's a few ideas we have that's around how do we move into the employed, uninsured. I think we're excited because you started with regulation. And we're really excited about some of the regulation that's coming because it's really forcing us all to go. We have a moral and social obligation to serve the breadth of South Africa. And for us, we're convinced that can be done in a way that still makes a lot of commercial sense for us as a listed entity. So in that sense, while some of the macro discussions sound tough, to some maybe concerning. For us at a life healthcare level, we're actually quite excited about the opportunities.
I mean, what about the macro discussions around Brexit? I mean, your UK operations are coming in very, very strong this time around, but then I'm just worried or interested in going forward, where to from here, and especially as we have political and economic turmoil in Italy as well, and the future of Ireland is uncertain. So
Sure.
how are you positioning for Sunday's Brexit draft deal discussion, right? Yeah.
So it's very much top of mind, and it plays out in each of those countries in different ways. I think Italy, we saw a bit of reform in the year. We're quietly more confident, at least for us as the provider in that space, because we do imaging internationally more than we do acute hospitals, so it's a little different, and the growth rates tend to be more compelling. But to the question specific on Brexit, is twofold. In the UK, we've already started to see affectation around clinical skills. People who live in Europe and have moved to the UK to work, we've seen that start to affect our ability to retain and replace staff. We're very aware of it, and Brexit could aggravate that. Similarly, in Ireland, we're really excited about that business. Our leadership team, they have done phenomenally, and there's one or two quite material investments we're considering, but we've just at the group level said we need to pause and see what a Brexit, hard or otherwise, does. Because you're right, until we see how this plays out, it could be quite significant, and I don't want to make light of that.
Final quick question. Poland, good turnaround there, sustainability going forward?
So first I want to acknowledge that team, because they've done a phenomenal turnaround in 2 years. And as you saw the numbers, I mean, 15% up year to year is great on the top line. I actually do believe it's sustainable. The nature of where we've done is we've shifted the mix dramatically away from being very cardiac focused historically to broad care, hospitals, clinics, and cardiac. So I think we're actually incredibly well positioned in Poland. We'll take the next year to two to think about how we want to either deepen that or use it as a leverage point into Eastern Europe.
Shrey, let us leave it there, and best of luck. That was the CEO of Life Healthcare, Dr. Shrey Viranna.